The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. So sorry for the interruption, folks. We live in a neighborhood where we take care of a couple of neighbors, and when one of them rings the the panic button, we're supposed to act, and that's what happened. The panic button was hit, and she locked herself out of the house. And it's very cold here, 21 degrees this morning, folks. Second coldest day in history in Tucson since they kept records. 19 degrees, I believe, was 1994, 95. 1994 was the coldest on record, 19 degrees. The high today will only be 42. So that's, no, it's Fahrenheit. Anyway, I posted a chart here of Apple, folks. We've been following three stocks, mainly when that bottom occurred. If you'll remember, just a short time ago, double bottom, of course, in December, had a big bottom in October, but we were watching three stocks. We were watching Apple, and we were watching Tesla, and we were watching Amazon. And I wanted to follow through with those because these were perfect ABCD patterns that occurred in all three of these stocks. As you can see, the low came in Apple at 126. The low was actually 124 and change. We're now trading plus 140 now. We're up around that 140 level. As you can see by this downtrending line that we have here, we have some resistance coming in here at around 145 in Apple, and that would be a 1-3-5 pattern. And folks, it's really come out of here very strongly, which is a good sign that the market should be bullish. And that was one of the reasons why we had that big explosive move to the upside. And now we're going to be running into some pretty strong resistance in some of these stocks. But, like we say, these patterns don't work all the time. When they do, they look great. But when they don't, you just got to stand aside and not even concern yourself with us. So the next thing we're going to do is we're going to take a look at Amazon next. Amazon is really a beautiful, if you ever had to write a book about technical analysis and ABCD patterns, I think you'd have to pick Amazon as an example. Look at this beautiful ABCD pattern to the downside. You can see the butterfly pattern that occurred down here near the bottom was at 81.50. And the low in the stock, I think, was 81.36 or something like that. It was within the pennies of the bottom. And now we've rallied up to a 382 retracement. This is very similar to the one that we had back here. You'll see back in here in early, late October. You see how it started to come down? I think that's October. Yep. And now we've made the same type of correction. In other words, this is basically the same move that we had way back in here. The difference is this has taken a little bit longer to complete. All I know is that if we start going higher here, folks, these markets could go a very, very long way to the upside. So you've got to be, you just can't stay there and be bearish all the time because, that's not gonna happen. This past week, on last Thursday, if you remember, Wednesday, we sold the S&P up there at 40.28, went all the way down to 39.01. We covered at 39.07, and that was a huge move for us. And yet, and then the next day, we took a 10-point loss on the short side when the market exploded to the upside. At one time, we had a $1,500 profit in it, but in a matter of about 5 or 10 minutes, buying came in with these dudes to do the algorithmic trading, and off it went to the races. And we were stopped out with a 10-point loss, netting, quite a bit on both of the trades, but the second trade was a loser. And those happen all the time. You just can't, there's nothing you can do about it. Speaking of that, since we're on this subject right now, yesterday we bought the natural gas just absolutely perfectly at the 3.61% retracement. It had a huge move, folks. $1,500 profit in it. And what we decided to do was to put our stop at break even and roll the dice for something really big because of the long-term weekly cycles that are supposed to be bottoming in natural gas. But natural gas doesn't know that. The bottom's not in yet. The market's kept breaking and breaking and breaking to the downside. So instead of making $1,500 or even $500 or even $300, we end up breaking even on the trade. Do I feel bad about that? No, I don't. And the reason why is one out of about every 8 or 9 trades is going to be a really, really big winner. The ones in between, they'll pay the bills, but the one that's the really big one, like the one we had last Wednesday in the S&P, those are the ones that pay a lot of money. I mean, most people don't see a move of that caliber. I'm going to show you another one this morning after we come back from the break. By the way, our guest tomorrow will be Stan Harley of the Harley Stock Market Letter. And then on Thursday, I'm hoping to have Shane Smullian as my guest. On Friday, I have to go to the doctor. I'm having a very small operation, but they're going to have me medicated. So they told me not to do anything like drive a car or speak too much. So I'm going to have to be at the office. It's very, very minor, but it's still, it's oral surgery. I've got an infected tooth that they've got to take out and put in a implant. Anyway, you don't care about the medical part of this, but I'm just giving you an idea of where I'm going to be doing these things here. Cannot believe how cold it has been here in this city. Okay, now we're going to look at Tesla. Now, this is the one that's got the most negative news at all recently because of Mr. Musk, rather flamboyant person that he is, much like Nikola Tesla, same way. Now, I wondered why he could name the car Tesla. He certainly had to play the estate of Mr. Tesla something, and I imagine his estate's still running because he had so many books and stuff. That I don't know. Anyway, you can see here the big ABCD here measured to 109. Remember, we hit 106 on the day when the news got really bad about Twitter or whatever it was. I forget what happened, but it was at 106, closed at 111, and then of course it's rallied up, and we're trading substantially higher, almost to the 50% level. And as you can see now, when you're looking at Tesla here, we have a 3-drive pattern. There's drive 1, there's drive 2, drive 3. They measure about another $5 to $7 higher. So now, folks, if these start to break up to above the upside, Apple above 150, and we get Tesla up above this 165 or so level, and Amazon above 105. This is telling you that this was a major bottom that we had here, back here on January the 5th. Okay, so that means that this January effect means the market has a strong tendency for the market to rally the first few days of January, which we've done, and especially the Russell, because it's been rallying more than some of the others. That's part of what that January effect happens to be. So that's what we're paying attention to when we're watching these stocks. I bring them to your attention for 2 reasons: to show you that the ABCDs work some of the time, roughly about 65% of the time. The rest of the time, are they tradable when they don't work? Of course. You just know they're going to go to a level that you didn't think they were going to go to. That happens all the time. That's the main thing of when you're doing these things, is that it's not how much money you make, it's how much money you don't lose. And you don't know which of these trades are going to win, or you don't know which ones are going to lose. So you just got to do them all. Today, for as a perfect example, I'm going to show you the chart when we come back from the break, was in the gold market. We sold the gold market yesterday at excuse me, at 1941, mainly because the market had made a 1.27 expansion on a 15-minute chart, and it gave us a chance to enter the gold market, which is a very active market, and we only had to risk $300 on a stock or on a commodity that's worth 194,000, for heaven's sake. So that's about as low as risk as you can possibly get. Well, I'll show you the pattern when we come back from the break, of course, but I wanted to walk through because when these things move, they move very, very dramatically. And if you're trading a 15-minute chart, there's not, moving averages don't work on any 15-minute chart, folks, because these things move so fast. You've got to have something that'll tell you that, yeah, this should be it. How much do I have to risk? And that's what we were trying to find when we were watching these these things unfold. Now, did it change? We're going to show you why it changed when we get back from this break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this next segment we're going to be talking about is defining the trend and, what time frame you trade with. Now, this happens to be a 15-minute chart on gold. I like 15-minute charts because they're quite clear. They have good volatility. They're easy to see. But a 5-minute is there also, but it's a little more busy. A daily one is good, but when you're trading a daily pattern, your risk is going to be greater, and you have to factor that in when you're doing your pattern. So that's the main thing. With a 15-minute, you can usually keep your loss down to around $500. Now look at the gold last night, folks. You see we made a high last night at 1944. Now look at the perfect Gartley that we had here this morning, folks. This was early morning, and I sent out a video before this was happening, and I said, you're going to be a seller here, and then you put your stop just right above there, okay? The market came and it broke a huge amount. It broke well over $2,000, folks. Now, that's a huge amount when you're trading a 15-minute chart, and something that's valued at $194,000. I mean, you can see, just to show you what happened here. Let me just to give you a heads up of what I have to deal with when I'm doing these videos. First of all, I was not here when the bottom occurred. You'll see the market broke down. I had an order to cover that position. I covered it right here before the big break came down, okay? There was the 61% retracement. There was a 78% retracement. Now, if I'm only risking $3 and I make $12 on that, that's a substantial amount, $1,200 versus a $300 risk. That is everything that I asked for. All I was doing, and I did this, I mean, I wasn't here to see the big break, but it went A, B, C, D. There was my profit objective right here. And then, of course, it went all the way down to the 78% level. And then guess what? It went all the way back to the 78% level again. So, I mean, these markets are crazy, and they're natural stuff. But when you're trying to, to take money out of it, and you see a windfall profit on a 15-minute chart, don't go to a daily to look where the darn thing might go. Just take the profit on what you think that was supposed to be. If you can do better than 3-to-1 on any of the profits that you're taking, you're gonna really do well, because you're not going to run into, when you do these types of patterns that we're doing here this morning, folks, they're all the ones I do in the video every day, they're no different. What they'll do is they'll give you money over and over again consistently, but you're going to run into a period where you're going to have 6, 7 losses in a row. That's just the statistics behind it. You can't get around that, because there's going to be a period where the market gets choppy and you don't see that choppiness until it's too late, or the patterns just don't work for a while. But do they work? Do they stop working? Oh, my God, I've been doing it for 60 years. They don't stop working. They might not work for a short period of time, but they don't stop working. So you just got to keep doing them. Yesterday, we had a beautiful buy in the natural gas, as I mentioned, had a $1,500 profit in it. It ended up, we got stopped out, and it's continued to go lower, so the bottom's not in yet. We'll still be looking for that bottom, but it's not in yet. And so we're going to keep watching it just like we do every day, go to the next level and try to get to that point. So I bring that to your attention. Now, if you're doing a half-hour chart, the half-hour chart's going a little bit different. Will look a little bit different than the 15-minute chart, because the 15-minute chart is a microscopic view of it, okay? Whereas the 30-minute or hourly will be a macroscopic view. So that's what I try to do, is to get to that level and make sure that it lines up nicely. Now, that gold should have made at least $900 to $1,000. If you'd have bought the 78% level on that, you would have made $2,100. The fact is that it gives you the edge, and that's really what you're trying to do when you're doing these things, is to get that edge, working in your favor. Another one that was occurring here that I thought was rather interesting, and that was this morning here, we were watching rallies in the grain markets because they've been in a downtrend for quite some time. And so what we were looking at this morning, I didn't get a chance to post this the way I wanted to, but this was the soybean post. I didn't get this one out in a video because I just wasn't here when it was happening, but there's where it was. You'll see here, this is the 382 of that high way back here, okay? And that was, you can see the big A, B, C, D pattern right up at the high, stays there for, well over, at least 1 day. And then it breaks down, makes a 382 retracement here. And then today it made a 382 retracement here. Now the risk on that trade was 6 cents, $300. But, when you look at it, what happened was, it never went against you by more than half a cent, $12.50. And look what it did, folks. It went all the way down. Get this up here so we can see it here. Went all the way, dropped 16 cents, $800. You're risking $300. So you figure you're going to make $600 or $700 on that trade. And that's the way that it works. Folks, I knew back in 1977 when I was at Drexel, and that was my second full year. I knew after 2 years I was doing really well, and I knew, and all I was doing was ABCDs, especially in gold and silver. And I was extremely bullish gold and silver during those years because we were selling the physical silver and gold. And so we did physical sales, plus we did, spec business. And I knew that I could do it because I was I never had a losing month. All the months I traded at, that was 6 years. I never had a losing month. I had a couple losing weeks, well, more than a couple, but not a losing month. And I could tell you stories about. I think there were 4 letters of resignation that I gave Drexel because I was so upset about having a bad week or something, or I'd done something really stupid, and I said I don't deserve to be in this business, that kind of stuff. Well, they kept them on file for me, and when I left, they wanted to know if I wanted them, and I said no, just throw them away. I said I don't really want to know, but I do get upset with myself when I don't do the right thing. But if I do the right thing, I know that I'm going to be all right here. I mean, I've been doing this for a long time here at TFNN, and we've never had anything really. We've had some bad trades, of course, but they're little trades. I mean, we don't buy something and it's got a $10,000 loss in it. That I'll hang up the old charting pencil if I ever run into that again. No, you got to put a stop in because you don't know what the heck's going to happen. If you don't think what's going to happen, you're in big trouble, boys and girls. Trust me. Here's a perfect example. Look at this gorgeous pattern that we've got going here in the natural gas. I mean, this is a really nice pattern, and yet the bottom's not here yet. So what you've got to do is you've got to keep nibbling to see what that level is going to be. And the first thing we did was we bought the pullback. It looked like it was going to be absolutely perfect today. Came in, the market was up. It was up Friday. It was up yesterday. Plus, it was up another 15 points today. So it was a total of $1,500 profit. Ended up being scratcherino because we got out of it at break even, and now we're still going to be nibbling at it again. We haven't given up, but that's the way we got to do it. That's the only way I know how to trade, folks, is that way. I can't buy something and pray that it's going to go up. That doesn't work for me. And we get back, we're going to talk about the opening price. I think you're going to enjoy this segment. This goes back into the history books quite a bit, but I think you'll enjoy it.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've got a chart up here of Apple, and it has the opening price marked on it. Now, I'm going to explain to you about the principle of the opening price. It was a book originally. It was a pamphlet, basically about 20-page pamphlet done by Jim Sibbett and Earl Haddady. They were in Pasadena, California. They had an office. There were 3 offices up there. Oscar McClure, a soybean trader, had one. And then the second office was Dave Nelson with Market Research. He was also soybeans. And then Jim Sibbett and Earl Haddady had, I think it was Sibbett Haddady Situations, what it was. I can't remember the name of the company. But anyway, he wrote this little pamphlet about the opening price. Well, they didn't publish many of them. It was self-published, and it was a little paperback, basically like it was really, really quite simple. It was never published by anybody. In fact, I have one of the old books here somewhere, but it was only about 25 or 30 pages. But what happened was, back in the old days, I'm talking up till 94, 95. No, it was more than that. When we started getting overnight trading, that's when things really got squirrely on the stuff, because the opening price was really fabulous during the time when we didn't have overnight trading, because people made their decisions the night before and they would act on the open. It was very simple. But then after that, the Harvey Hartkin and the old Sos Bandits came in, and we had overnight trading, and then Globex and all this other stuff. But the opening price still has some good validity, especially if you're trading foreign exchange, because foreign exchange markets open in London around 8 o'clock London time, which is about 2 o'clock in the morning our time. But if you'll notice those times, you'll see that the market has a tendency to make a high or a low around that time. Just by looking at this chart, you can see these little red boxes. That little red box is where it was open near the low of the day or near the high of the day. That's what those are marked. And if you go back and looked at all of them, better than 75% of the time, this still works in stocks, because not many people trade early morning or late afternoon stocks. The public doesn't. I know that the pros do, but the big stuff, the public, they're doing their own thing in the morning, and that's why you see tremendous volatility at the opening of the New York Stock Exchange. So if you want to watch something, the key is that if you're ever in a position that you put a position on and it's not working, all you have to do is ask yourself the question, am I above the opening price and am I long? If you are, you have a better than 70% chance of making money on that trade. Now, if you're above the opening price and you're short, you've only got about a 30% chance of making money on that trade. That's for day trading purposes. That's really what that's all about. Like this morning, perfect example was in the natural gas. The natural gas opened way up there. It opened up, I think, about 3.54 or something like that, with the high being 3.59, and it drifted lower the whole day. So if you were buying during that time, the chance of you working or winning was not going to be very good. Does that mean I don't trade against the opening price? Of course I did. What I did was, I took a little profit in the natural gas there, because first of all, it was a nice profit. And second of all, I could see I was below the opening price. So I'm saying, well, all right, I'm going to buy the pullback. So the pullback came and went, and they took another 5 points away from me. So I made 15 points and gave 5 points back. But that's mainly because if I would just said I'm only going to trade in the direction of opening price today, I would have not been long the whole day. But when you have a real strong trending market and you have a pullback, okay, in the middle of the day, just like we did in the S&P here today, that's where you get those big moves, and you can trade like Tom Hugard, just keep pressing and pressing and pressing and adding to winners. But that doesn't happen all the time. It really doesn't. You've got to be able to determine, how important that opening price is. You've got to prove it to yourself, folks. There's really no other way around it. I wrote that book, the Opening Price book, mainly because when I was learning this stuff through John Hill I met John in 1970, but from 76 through 80, I was back there in Hendersonville, North Carolina, at least 2 or 3 times a year doing research and stuff. And John's son, John Jr., was at Duke University in computer science. So he had all the computer skill that we needed. And we had all the data from the Chicago Mercantile Exchange because I was a member. And that gave us all this data. So we matched it up and saw that the opening price was indeed, about 65% of the time, the low or high of the day in the commodity markets. We also did some stock stuff, but not much. Most of it was commodities, was right near the lower high of the day. So it's a very useful piece of information. But the only way you can learn this is to do this type of work that I put up here to show you. If you go in and just look at the highs and lows, I don't use candlesticks when I do work like this because candlesticks are skewed by the width of their and the skewing of the and the width of the candles too. So I just want to know that the left side is the open, the right side is the close. I want to see whether it opens near the high or low of the day, how many times. So if you do, let's say 50 days worth of data, you're going to realize that about 40% of the time, the market's going to be pretty much spot on right at that level. So that's pretty much what you're looking at. Excuse me. You wouldn't think Palo Verdes would be blooming at 21 degrees, but they are. So that's why you use the opening price. I'll make an offer. Anybody that needs the opening price book, if they'll donate $15, the usual price of the book is $45. I will, if you'll donate $15 to charity, I will send you the opening price book and a PDF file, and you can check it out yourself. And if you don't have the $15, don't even worry about that either. But if you do have a chance, be like buying a meal for the homeless and stuff like that. And believe me, folks, you're in the desert and you've got 20, when you wake up in the morning, the sun is up and it's 28 degrees. It is flat cold. I mean, with the wind, it's really, really cold. All right. I wanted to talk just a little bit. I covered that part about the opening price. And I'm going to bring this to your attention to you one more time because we got a break coming up here quite shortly in about a minute and a half. So I'll take a time to tell you a little bit about what's going on in my life. I've had a really exciting past couple of weeks here because my good friend John Jameson has decided to really get into options trading. He's extremely good at it. And, I mean, you should see what he does with options, folks. I mean, it's just, it should be illegal, but he knows how to do it. He's very good at it. He knows all the little deltas and all the other stuff. And he knows how to leverage positions, much like what Tom Hugard does. He trades large size and doesn't go for home runs, but he trades large size. With options, you get a slight edge, and his edge is a lot slighter than most other people because he really knows what he's doing. And so I'm going to be doing some of that sometime this year, a little bit. We'll probably even have a class on it sometime this year because it's really exciting to see what he does. I mean, even when he loses, I mean, it's like a break-even trade for anybody else, for God's sake. And some of the ones that he hits are, really spectacular. Remember, he's the one that bought Cardano at 6 cents when we were doing our very first trading thing about 3.5 years ago, and he sold it all out at $2.86. So it was, one heck of a run here. Listen, we're going to take a break here. When we get back, we're going to talk about crude oil and how you determine when the trend will change in crude oil. Doesn't work all the time. It's like everything else, but it does work some of the time. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I posted a chart here of the crude oil chart. It's a 4-hour chart. You can see it's been in a really strong trending market here for quite a while. Now, what we're watching here is a market that has gone right up to made a double top, as you can see the double top. And you see the 382 retracement going into that top right there. You see that on the far right of the chart, I think you can see the little mouse wiggling right there. There's the 382 retracement. You notice that once it broke that, the rally back stopped at a lower high right at a 61% retracement. That's how you define trend, folks, in a shorter term market. Look at this one right back here. You see how once the 382 broke, the trend changed? So once that 382 pattern breaks, that tells you that, this is where you want to be watching. And that's all I was doing today when I was watching the gold on a 15-minute chart, watching the same type of thing, just to determine whether this was in fact going to be a place where I wouldn't have to risk, very much at all. And that's the whole key to what we're looking at right now. Now, there's a lot of people that are talking on Bloomberg and all the other places, World Economic Council, Davos, that the recession is over and it's going to be mild and all the other stuff. And all of that stuff could be true, folks. But as a technician, you have to pay attention to what the technicals are. And the market has been really strong coming off that bottom last Thursday and Friday when we hit 39.01. It exploded to the upside. We took out those old highs, remember, at 40.30. and the market's trading at 40.37 right now, so it's still at a much higher, well, it's fourth, just see it a little bit higher than that now also. So those are things that, once that market moves against what you think your premise is, you've got to change your mind. There's just no other way around it. One of the advantages when you're trading on a shorter term, you can see what your risk is and when the market starts to move against you, and that's when you don't want to get involved. Even though we had big profits and all these things, I mean, we took some of it, but I have to rely on the people that I'm sending this information to you to remind yourself, if you're only risking $300 or $400 on something and you make 3 or 4 times that, that's the time where you want to be taking your profit. Now, if you're looking for something really a whole lot larger, that's okay too. But no matter what happens, you've got to be out at break even, because if you have a $900 profit in something and you lose, wow, let me tell you, you've done something really wrong, because that means that you tripled your risk, believe it or not, and people do that all the time. I don't mind taking, for example, just in the natural gas. I don't mind taking the loss in the natural gas. Getting out at break even in natural gas, and the fact that I left a lot of money on the table, because I'm looking for something possibly a great deal more. How am I going to handle this? I'm going to handle the next trade just like I did this one. I'm going to get in it, and if it starts to move in my favor, I'm going to get my stop to break even, and eventually on 1, 3, 4, 5 trades, that'll be the one that I'm looking at. My favorite Paul Tudor Jones story, I've told it so many times, and I love telling it. And I remember having a cocktail with him once and told him how much I enjoyed it. And he laughed and he said, yeah, people ask him about it all the time. He was being interviewed by the Wall Street Journal in 1986. And it said, boy, it must be really great to be able to be the man who called the bottom in the Treasury bond market right before it rallied 20 points to the upside. And Paul Tudor Jones said to the reporter, he said, well, that's only partly right. And he says, what do you mean? He said, the quote should be, it must really be nice to be Paul Tudor Jones, to pick the bottom in the bond market right before it rallied 20 points to the upside, after he had lost 5 times in a row trying to pick that bottom. And that's the true story. He tried 5 times before he finally got it right. And then he did get it right. And that's the main thing that you got to remember, folks. It's not how much money you make, it's how much money you don't lose. You can't sit there and buy bonds. Look at the people on the way down, folks, that lost a fortune in bonds from 176 down to 119. Hello, operator. One of the largest bear markets we've ever had in the last the only bear market we've had in the last 30 years in Treasury bonds. So, and I'm not sure if this one's finished yet, but these are things that when you're dealing with technical analysis, that it's going to give you an edge that you just can't get over. One of the trades yesterday from one of our folks sent it to me. I'm going to send it again because it's a perfect example of this 135 pattern that we talk about all the time. And this is a pattern from the Longstreet, Bill and Roy Longstreet. You can see the symmetry here, folks, between highs. That's a definition of a downtrend. You see you have lower tops and lower bottoms. And there you go. This thing went all the way down, dropped off the board, and it rallied back about 40% from that level. But this is what happens here. Now, there's a perfect example here. If you're only risking about 10 cents in silver and it gives you close to 80 cents, don't you think that there's some time during that time you ought to be taking a profit in something? Because it's a 15-minute chart. You're not in this for long-term capital gains. Of course, we don't have those anymore. But that's why you got to realize that. You got to take profits sometimes. And that's it. Now, I take the responsibility because when I tell people I'm staying in till I break even, that's what I'm usually doing. Now, do they have to do that? No, they don't. But that's what I do because I'm working with these folks that most of them are trying to learn how to trade, and I'm trying to show them the good, the bad, the ugly, and sometimes just a little more ugly than I want to be, but I don't take any, monster losses. That's the whole thing, That's it. It's just pretty much what's going on here. So let's remind ourselves that that's what this is all about as we're looking at these. And I wanted to share, someone asked another question about another chart that we've been talking about for quite some time. Hold on one second. That is this note chart, because we're in the midst of what we think is a ABCD pattern here in the notes on the long-term weekly. And here again, you're going to see how bearish this market was all the way down. We hammered it. I tried to tell you, we hammered the idea home that these patterns here, we're telling you this giant ABCD that we had here in the long-term weekly here was at 176. It went down to 118. Now you can see we're forming our first ABCD pattern in 3 years, folks. There was a little tiny one right here 2 years ago. Okay, we had a little tiny one right here. So this is the first really big one. And that should take us, we could get as high as 135, possibly even maybe even 139 or 140. But when it gets there, when that ABCD pattern finishes, that's when the pedal is going to meet the metal, and you're going to have to decide whether you want to, get back on the short side of this thing, and we'll wait and see, what it looks like from that point. So I hope that makes sense to you as you're looking at some of these things, because that's it. And there's nothing else I can do about it, Anyway, I hope that helps. We'll be back with you after we take another break here. I think the clock on the wall tells us that we're getting ready to have another short break, and then we'll finish it up, and we'll go from that level here to the next part of the show.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, someone just flashed me a headline out of The Guardian, out of the UK, saying get ready for the doomsday clock to hit with Russia war stuff. Folks, that's the stuff that's going to drive you absolutely crazy if you read that stuff or even believe it. You know, most of the stuff that's out there is baloney. And so just trust what the charts are telling you. If this is a doomsday clock, why is the stock market up today? Hello, operator. They're not those people in Wall Street are certainly not naive. So that's just someone trying to make a point and being very unrealistic as far as what they think is going to happen. So trade the patterns and don't worry about what the news is, for God's sake. I mean, you don't know what's going to happen next, especially this war over there. I mean, my goodness, there's so many things going on in the news that you don't know what's true and what's not, and you should care, but there's not much you can do about it. That's absolutely for sure. So I do believe that we do have a positive bias here for at least another few days. As we come into early February, it's going to be a whole lot different. So those are some of the things that we're talking about. Now, tomorrow we're going to have Stan Harley as our guest. I believe we'll have on Thursday, we're going to have Shane Smolian. And so we'll have some pretty good folks here to tell us what they view of the market. So anyway, that's pretty much it, to give you a heads up of what I'm looking at. By the way, if you do want the opening price, you send it to Larry at tradingtutor.com, and I'll send the book out to you. And it's a nice little book. I've sold lots of copies. People really liked it. And but it'll give you a rough idea of how the opening price works. And it still works. You just got to prove it to yourself. And that'll give you an idea that it still has some, applicable trading patterns during today's market, especially if you're trading stocks. It's great for stocks. Futures, not so much, because they trade around the clock. Unfortunately, I'm aware of that more than anybody. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow with Stan Harley, folks.